Who that? AKA, who that? Unlimited tax. 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 We got the best in the city, so come and fire with us. And we gon' get you the max. On for real, you gotta come see us. And we serving all 50 states. It don't matter where you at. You can get your tax e-file, or we can send it in a check. Let go. Tax loans, come and get them. We got affordable prices. Come and eat with a boss. I got a couple of slices. Come and see what the hype about. AKA Unlimited Tax Service. Come see us right now. Right now.
Greetings, everybody. Say hello, hello. Say first live in over a year and a half, but we're back on YouTube. So we're going to give everyone a chance to get in here while I'm waiting. Just want to say gratitude to everyone who still follows the business page, to everyone who has been sharing the page, to everyone who is new to the page. I want to say welcome and gratitude. So this is where y'all will now begin all the information that Mz Nene has to share. I will no longer be doing my lives on Facebook. It may be once or twice where I probably will do the StreamYard where it shares on Facebook as well. But I know right now for the next week or two, it's all going to be YouTube. So you guys, please make sure you like, share, subscribe to this page. If you can, go ahead and share this live so we can let individuals know where to find me now. I still have the business page on Facebook, but we will not be doing the information that I give on Facebook over on Facebook anymore. So, like I said, for you to just have the information and stay in tuned and updated with my information. Y'all know how I give the information. I give it freely. I give y'all the resources to go look up anything that I am saying. I like for y'all to be your own fact checkers. So just know it's still going to be the same thing over here on YouTube. I'm also streaming right now on Twitter. So if you're on Twitter as well, go ahead and share out the post with Twitter. But we're going to be on YouTube from now on. So I'm excited about it. I know in the beginning I'm going to have a small amount of viewers because right now the following on the YouTube is only like 1,000. And versus with the Facebook is like 40-some thousand. But y'all know I'm not one who's worried about quantity. I'm more worried about quality. So I would rather deal with a smaller group that appreciates the information that I give. As y'all can see the disclaimer, anything that I give will be in my own opinion. And even though I know I'm speaking facts, everything that I speak will be available on irs.gov. So you can always go back and look and see if that's really what it is. Okay. So yes, welcome to the channels. Yeah. As y'all see, I told you I got rid of the little rainbow old business is still there. The AKA Unlimited. Of course, y'all just heard my jingle and it still says AKA Unlimited, but I am now AKA Platinum Unlimited. We are in the process of rebranding for my company. So y'all just bear with me as I get through this, and I appreciate the support, the continuous support of my channel, of my business, of myself. So I know this is YouTube only. Hey, Miss Clara, how are you? And I did not share it on Facebook. I only told Facebook, hey, if you want to get this update today, you're going to have to be on YouTube. So yeah, we're going to get on YouTube from here on out, really. So let's just get this following up on the YouTube channel as well as on the Twitter page. It is both YouTube and Twitter in these moments. Now, y'all, if y'all were on the live that was on Facebook over on Friday, y'all know one of my main concerns going to the upcoming season is how these credits are working. We have to get away from these people thinking you're going to be getting $4,000 per child. We know that it's not so. I did share the EIC table. Y'all are more than welcome to go over on Facebook and download that publication because it is over there. It is accessible to the public and it is accessible to anybody that wants to know. So you don't have to be a tax professional in order for you to get that. Okay. This was my welcome. So y'all seen that this one is titled welcome only because I wanted to go ahead and make sure the streaming works, make sure that everyone can hear me and see me clearly. This is sort of like my test run right now. So I see I have 8 individuals. I am grateful for your 8. So it's going to be a short live, but I am going to deliver some information really quickly, just in regards to what you guys need to be looking at, what you need to be getting prepared for, what documents you need to be getting together, whether you're filing with me or filing with another preparer, or if you're an office or a preparer, what you need to be telling your clients they need to be getting together. So if I can, everybody who is joining me, if you can, just in the chat, put hi, hello, greetings, anything, just so I can see who I am talking to this morning, well, this afternoon. I'd appreciate it. I know, Miss Clara, you dropped the heart, so gratitude for that, love. But yeah, we know that next year it is going to be all about due diligence. And it was some things that I wanted to share that I was not going to share on Facebook that I am going to share over here on YouTube for the simple fact. Hey, Sabrisha. Hey, Miss Elaine. Gratitude for letting yourselves be known. It's I'm not going to say it's sensitive information, y'all, but it's stuff that y'all know on Facebook. As soon as you go and start talking about facts, people do not want to hear facts stated. Hey, Jasmine. Hey, Monique. And I'm a fact person. I deal in facts. I don't deal in fiction. And so for that reason, I'm like, nope, Nene, you're going to have to go to YouTube so you can give this information how it's supposed to be given. So I'm going to go ahead and start giving this information how it's supposed to be given. For one, y'all need to be checking out your W-4s. Make sure you're not underpaying, because people think that it's a game until they go and file and see that they made so much money and haven't paid anything into taxes. Now their refunds is significantly reduced, and they're trying to figure out, well, how a person who made $18,000 with 2 kids is getting back more than me, and I made $25,000 and I got 3 kids and I'm not getting as much. It goes into your standard deduction amount. So if you're using head of household, it allows you to make more. But remember, I told y'all tread lightly with wanting to be head of household in the upcoming season, because head of household is triggering audits, just like claiming other people's kids, just like claiming Schedule C income. Simply saying head of household can trigger an audit for you. So y'all be careful when y'all are electing these filing statuses. Something as simple as saying I am head of household because you got dependents is not suffice in the IRS eyes for you to be head of household. I know I had a lot of backlash, but they somehow understood after I explained it to them how the head of household filing status work. It is the only filing status that comes with due diligence. It is the only filing status that can call your return to be held, regardless of if the information reported is truthful or not. When I say truthful, that means it can be your W-2 from your job and just your kids, and you can still get audited simply by saying head of household. So we're going to be discussing all of that over here on YouTube, and I'll go into depth on what you need to be saying. If your income isn't reflecting it, it's okay for you to say you're single with your dependents, and you'll still get the same amount of money. You're not writing yourself out of anything that you will be entitled to. Now, at a state level, some states do have stimulus payments coming out. I'm going to do the research on that as well this week to see which states have what stimulus coming out for their residents. This is why I say y'all have to pay attention to wording, because it can be someone sharing something from the state of California saying we're getting stimulus payments, and a person in Ohio thinking, well, why I'm not getting that stimulus payment. So each state has its own set of credits. It has its own set of filing statuses. Yes, I said filing statuses. So what the standard deduction is for a single individual on their federal return may not be the same standard deduction amount at a state level. Each state has its own set of deductions. So y'all just be mindful of the state that you're in. I know particularly the South, we have some of the highest tax rates and lowest standard deduction amounts allowed at a state level. So you'll be taxed differently on your state return than you would on your federal return. You have to remember state and federal, those are two separate entities. They do not intertwine. You don't send your state to your federal and your federal don't go to state. So y'all, please, y'all remember that. Hey, Miss Candy B. Hey, Shayla. So y'all be careful with that as well when y'all are looking for credits at a state level. Remember, what you get at a state level is not what you get at a federal level, and what you apply for and probably qualify for at a federal level won't necessarily be what you'll get at a state level, but they operate differently. Okay. So check your W-4s, make sure your W-4s is right. Estimated payments for my business owners and for my gig workers. When I say gig workers, this is the Uber drivers. This is the individuals who are doing some kind of contract work for someone's company, and you own the business. You're just in contract with them. You can make estimated payments throughout the year, which is usually due on the 15th of each month. And then it's so it's April, oh Lord, 4th, 6th, and 8th months, and then the first month of the year of the following tax. So that is usually when the estimated payments are usually due. But if you have not made those payments and you see, I don't made about $20,000, $25,000, $30,000 in business for myself, and I know that those taxes is going to eat me up. Now it's 15.3% of your earnings. So if you want to see how much you're going to be owing at a federal level for your business, do 20,000. Let's say you made 20,000. Do 20,000 times 15.3%, and that's how much they're going to be taking out of your refunds, or that's how much tax they're going to say you owe based on the earnings of your business that you're reporting. So estimated payments sort of help offset what they're saying you're going to owe as far as your estimated taxes. So if you need to set up estimated payments, you can do that directly through the IRS website or ID Me. You can log in and just once you get into your account, you can hit to set up a payment or submit a payment, and you can enter however much you want to. Just make sure you do it before December 31st. You cannot be saying, I made an estimated payment on the 1st of January that you think is going to apply to the tax year 2023. It will not. You have to make that payment before the year is out. So if you're going to be doing estimated payments, please make sure you make that payment through the IRS website, through the portal, or ID Me before December 31st. Okay. Direct deposit. Y'all need to be setting up your accounts. Y'all do not let these people be putting your money into their own personal accounts, because if the IRS don't catch it, that person's bank probably will, and they'll probably send your money back to the IRS, and now you're going to have to go through hoops and loops just to get your money back. So you don't want to have to be stuck in that situation either. Okay. You want to have to, go through the authorization again, and you don't want to do that. Why are you prolonging your money? Just go and create your own prepaid account, bank accounts. If you're a person who can't go open up a traditional bank account, open up your prepaid card just for tax time so you can get your money with no delays, because they're going to be cracking down on where these refunds are going. They had too many people in the prior season saying, I did not get my money, or that is not my account that's on that tax return. Y'all be vigilant. Y'all start reading over your 1040s. Your 1040 should be a reflection of what you provided your preparer and not what the preparer has thrown on your returns. The next one is the credits. Now, I know we got a long way to go with discussing these credits. I'm probably going to have to break down these lives that I do to discuss these credits individually, one at a time, simply because we know child tax credit is different from earned income credit, is different from the child and dependent care credit. CTC is for those kids that's 16 and younger. So if you got a child who is 17 years old, still in high school, you won't get CTC this year in the upcoming season because that child has now turned 17 by December. And regardless of if they're in high school or not, they will not qualify for that CTC payment any longer. You will still get EIC, but no CTC. Sabrisha said, I have a credit union of Texas, but I'm thinking about getting a prepaid card. I was wondering with the prepaid card, when can you go to take the money off all at once? Sabrisha, usually Walmart. Walmart will usually let you take your cards there and get all of your money off at once. If you're trying to have a prepaid account set up just for tax time, so it's not really linked to your bank account information. I know it's so much fraud going on. Hey, Miranda, it's so much fraud going on. I'm even skeptical about sharing my checking account information because people can get your information and you thinking it's only for taxes. And next thing you getting alerts saying you set up, apply for credit cards and open new accounts, and you looking like, wait a minute, where is all that coming from? Because you've given out sensitive information. So y'all be careful with how y'all are sharing the information. When y'all are doing these estimates, let's talk about this. And this is what we'll dedicate this first welcome live that I'm doing. We'll dedicate it to you doing the due diligence of your professionals. When I say due diligence of your professionals, you asking the questions of the person you are trusting with your personal information. All of that is sensitive information. We have a issue right now with individuals' information being compromised. And when I say compromised, it is y'all are giving information out that should be confidential. When you're getting estimates done, y'all do not give y'all actual information. Don't y'all give these kids real social security numbers. Now, you will have to give the accurate birth date in order for the estimate to generate the correct amount, but you don't have to give the accurate social security numbers. You can tell the person you're getting that estimate from, hey, I just want to see about how much I can get, or how much I'm looking to get in the upcoming season. I have a 12-year-old, and this child was born in December of 2013. You don't even have to give the date. But y'all get out the business of trying to give all of your information just for the sake of an estimate, because that estimate can cause you to lose out on having a choice of where you are filing at, because the person you went to the first time, you don't gave them all your information. Now they don't ring that return based on the information that they got from you for the estimate. And it may not be all of your W-2s. It may not be the entire amount of business income you have. You may be waiting on a statement from the daycare because you don't made enough money to where you qualify for that non-refundable credit for child independent care. Hey, Miss Love. And so y'all get out the habit. Y'all don't have to give y'all accurate information for an estimate. Anybody who's ever gotten an estimate from me, and y'all know I do them for free, I don't ask you for your child's social. I do not ask you for what is their birth date. I will ask you, okay, you got a how old? So what year was that child born? And I'll make up some dummy information simply because I know you're only wanting to estimate. You're not ready to file. Nobody should be telling you that you can come on and file in December, because it's not happening. You cannot file before the season starts in 2024. So if you got people who are sending you information or telling you, hey, you can go and send your stuff and I can go and put it in now. No, you cannot. You're gonna have to wait until January, and they will lock your stuff in, and you won't even know you're locked in, and you don't gave them all this information, and they send it off. Okay, so dummy information. Remember that. Give out dummy information. You don't need to be giving out accurate, factual information. Your personal information should be safeguarded by you. Okay. Secondly, for my people, and this is why I'm on YouTube and not Facebook when I say this, that allow people to claim your kids. Y'all be careful with it in the upcoming season, because they are cracking down on if you're receiving any kind of government assistance for that child and it is under your name and you're letting someone else put this child on their taxes, that person can potentially be audited, or you can potentially have your benefits ended, because they will be able to see that hey, this isn't who these benefits was going to, or this child is listed under this person, but this child is on this person's return. So we need to see how this person cared for this child in order for them to claim the child. So going into the next season, y'all be vigilant when you're doing that. And let's talk about this. I hate to go back into it, but I have to, because I don't want anybody thinking that you're finna say, I need $2,500 for you claiming my child. When? And we know that this stemmed from the refundable child tax credit that came out in 2021, where they was giving the $3,000 automatically and a $3,600 automatically for kids at a certain age. And individual was like, okay, I'm gonna need $2,000. Shut the door for me, Krishan. And we know how that went, because when it came time for what? Them stimulus payments, and people had their kids all over the place, and they was like, they never gave me my money, and they sent the stimulus payment for my baby to her, and she ain't supposed to be getting it. I wanted to get my own money. And then y'all went and filed y'all returns, and then y'all tried to get the stimulus payments because you said somebody told you can double dip. Oh, if they paid it to them, they'll pay it to you too, until you filed it. And then you seen that the IRS said, nope, we're making an adjustment because you were not qualified to receive this payment. We've already issued it. This is a lot of what's about to happen in the upcoming season. When you are letting individuals use your kids, y'all be realistic. If a person has made too much money and they're saying, hey, I need your help, sister, or I need your help, mom, or I need your help, because they made so much money, they haven't had anything withheld. They think that child is going to save them from having to owe. It is not always the case. Okay. So y'all don't get out here asking these people for no $2,500 for their kids. Okay. Can we agree with that? I'm gonna need you guys to agree, even though it's a small number of us. The ones who come back and watch this replay, I need for you guys to know, do not be out here trying to calculate 50% of $4,000 because you think they're finna automatically get $4,000 for using your child. They are not. Earned income credit is not working like that. Child tax credit is not working like that. And I can guarantee you, the babysitting, y'all remember the W-10s where they was letting people say, hey, I paid this person? The W-10 is still here, but we didn't hear anybody talking about filling out a W-10 in this tax season. Why do y'all think that is? So everything is changing. It is going back to what it used to be, where proof is required. They was making things fully refundable. They were making refundable, non-refundable credits, refundable credits. All that has changed. None of that is the same anymore. So when y'all are out here, and like I said on Facebook, if you did not get to catch the live on Friday, go back and watch it, because I gave some jewels in there too, to where I don't need y'all thinking that your kids, each one of those kids is $4,000. It's not. It is not working that way. We have a lot of ill-prepared professionals right now. They haven't been trained properly, because if they know, like I know, if they've attended these seminars like I've attended, if they read the publications, they will see that it's nothing per child, y'all. I'm sick of hearing how much is it per child? What do I get per child? You don't get anything per child. You would get the credits based on your income. Income and income only is what will determine how much credit you is awarded, not really how many kids you got in their ages. It's not 2021. We're going into the 2023 tax year. Sabrisha said, so Sabrisha, let me share yours. Hey, Rapid Lions. Hey, baby. So Miss Sabrisha asks, how can we tell if we had enough taxes taken out throughout this year? So Miss Sabrisha, what you can do is look at your gross wages, your gross earnings, not the net, the gross. And I need for you to calculate that gross amount by 10%. So if you made $10,000, the minimum that should have been withheld is $1,000. Now we both know, me and Miss Sabrisha, all of you guys who are joining, we both know that 10% is usually the amount of federal taxes that they withhold from any payments that was for unemployment, Social Security. They give you the option on your jobs. Y'all remember the tax cut is what removed any kind of personal exemptions. Is still zero, is going to be zero until tax year 2025, meaning January 2026. So they're still going to be having y'all exempt on y'all jobs unless y'all say otherwise on your W-4s. If you made $10,000 and you paid in $1,000, I can guarantee you're going to get that whole $1,000 back. But you need to pay it in still. I know a lot of people go through the year and they like, I'm fully exempt. I don't need them to take nothing. I need all my money. Well, in the upcoming tax season, if you elected to take your money home throughout the year, you cannot be expecting them to give you a large refund when you go to file at the beginning of the year. Why? Because you have elected to take the majority of your earnings home. And we know that the government loves their taxes. So they're going to want their taxes out of you. It's going to have to happen. They're going to have to see that you're paying your taxes. You cannot not pay your taxes on your income earned. So by rule of thumb, 10% is what you should be having withheld. It's a lot of individuals, when they look at the tax side of their check stubs, they'll see the FICA, they'll see the Social Security, Medicare, even the state being withheld. And they'll be asking like, so how much federal have I paid in? If you don't see it say FED, WH, or federal withholding, or with the FW, then they're not withholding anything federal. So if that is the case, when you go to file, your box number 2 is going to be empty. It's going to have 0. And you don't want that. If y'all want me to tell y'all how to maximize these refunds for my W-2 employees, let them withhold that money. So I'm going to give you a quick example. A person who made $15,000 didn't pay in $1 in federal withheld, but they got 2 or 3 kids. We'll just say 2 for the sake of. They're looking at a refund of probably about 7 or 8. Now, let's say that this person who made that $15,000, they paid in that 10%, meaning they let $1,500 be withheld. So instead of them now getting a refund of like $7,800 or $8,000, they'll be getting about $9,500 to a $10,000 refund, simply because that whole $1,500 is going to come back to them and it's going to add into their refund. That payment is going to come back. Same stands true for estimated payments. Let's say you've been paying $500 each quarter. That means you paid a total of $2,000 in estimated taxes based on what you think you're going to owe. But when you go and get ready to report your business, you see that your business has only made probably $10,000, $15,000 a year on the books, but you've already paid in about $2,000 in taxes. So that $2,000 is going to offset that $1,500 or $2,000 that's going to be due. And that way you'll get all of your credits. So now a person with a $15,000 Schedule C with 2 dependents, instead of you getting about $34,000 or $4,000 in a tax return, you are now potentially be getting about $6,000, $7,000, because that entire estimated payments, the $2,000 that you paid, is going to offset the taxes. And now you're going to get all those, the fund, additional child tax credit and earned income credit. You will get all that, and it will not be offset. So if y'all want to know, how am I going to get a good refund? How can I guarantee I get a good refund next year, Ms. Nene? Pay those taxes. I'm not here as an accountant. I'm not here as a tax planner. You know, your accountants and your tax planners show you ways to save money and how to get certain deductions to where you don't have to report certain incomes and all that. That is not my job. My job is as a tax professional. I'm a tax preparer, meaning my job is to make sure that my clients are knowledgeable on what forms they have to file, what must be reported, what can't be reported, and then also what you can use as deductions to help minimize your tax liabilities, and what you can use certain payments to increase your refunds. So going into the next season, y'all, it is going to be important that we pay our share of taxes on the money that we're earning. That goes for W-2 workers and for the individual business owners, Schedule C. I also want to touch on in this live, please, my people who are contractors, independent, business owners, single member LLCs, sole proprietors, Y'all are not filing 1120s or 1120s unless you have elected to have your business structured as a corporation. If you did not do that, then you are not going to be reporting anything other than your 1040 with a Schedule C attached. So do not go and file your taxes with your W-2 if you know you have a business that is registered and making more than $400 and you're like, okay, I filed my personal, now let me file my business. Your business should be included with your personal return on that Schedule C. We got to get out the way of that. I know, it sounds good when we're in business to say, I file business returns. Well, please take the stigma out. Your Schedule C is your business return. That is the business return that single member LLCs and sole proprietors would need to be filing. Throughout the course of me doing these streams on YouTube and Twitter, I'll be talking to you guys about what forms you need to be getting together, what apps you can use to help you start tracking. Now, granted, if you are just downloading any kind of apps to help you with your accounting, to help with your mileage logs, to help with your payroll, to help with expenses from the business, 9 times out of 10, it's going to be off because you have not been tracking it from January up until now. But I do not want to discourage you and say, don't do it. Please still go ahead and file it. Create it so you can at least have some kind of records to account for what your business is making. The 1099Ks is going to be a lot of our friends because we got some bad record keepers. If you know you're not a person who keeps up-to-date records, you're not good with the record management, then that 1099K will help solve half of your problem. I didn't say all of your problems, but that 1099K will potentially show what your business earned in the 2023 tax year, where you can take that 1099K along with any receipts, any invoices, any bank account or payment summaries that you had for material supplies, jobs that you hire contractors for. That right there will be all you need in order to file an accurate Schedule C. But that 1099K will need to be used as business. So for my people who work W-2 jobs and you have a business, and let's say your job, you're already making $30,000, $40,000, and you only got one child, and you're like, well, shit, I'm gonna get this 1099K, but I know this 1099K is gonna put me over the tax limit and it's gonna lower my refund. I don't want to use this 1099K for business. Let me explain something. If you elect to use it as other income, it is not going to be classified as earned income, and it is still going to add into your AGI. It is still going to be taxable income. You just won't qualify for any credits off of it. And that will sort of defeat the purpose of you adding it to help with the income proof. So your 1099Ks is for your business. It is for if you have not been able to keep up with what your business have been making, that 1099K is going to be your best friend going into the next tax season. When we get to the child and dependent care, that's the 2441. That is for the daycare. That is for individuals. Your kids have to be under the age of 13 at the end of December. So if you have your child in daycare at this moment and your child is 12 years old, but let's say December 31st, that child is going to be turning 13 years old. Unfortunately, you will not be able to use the 2441 because that child turns the age of 13 within the tax year. And for that reason, you are now not allowed to use what you've been paying out of pocket for daycare for that 12 turning 13-year-old for the entire year because of the age. So everything is going back to being based on your income, what you're making. And if y'all need to know, it allows you $3,000 in expenses, and this is daycare. They allow you to report $3,000 for one dependent, $6,000 for two or more. So if you got 3 kids that you have in daycare, you still cannot report more than $6,000 in expenses. Now, it's not saying it's going to give you $3,000 in credit because you spent $6,000. What it's going to do is, out of that $6,000, it is going to give you a total of 35% of your expenses, just 35%, and it's non-refundable. So if you have no tax liability due, This is for the individuals who make under $21,000 and you have no tax liability due. Then that child care is not going to help you any. It is not going to add to your refund. It is not refundable anymore. It is a non-refundable credit, meaning it'll only generate if you have a tax liability, meaning you have income that taxes are due on, and it will help offset the tax liability. I need to let y'all know, if you got a tax liability of $5, guess what your payment is going to be? $5. It is not going to say just because you got a $5 tax liability, but you don't pay $6,000, that it's going to give you a non-refundable credit of $3,000 or even the $1,800. It is not. What it's going to give you is whatever the tax liability. It only goes up to the amount of taxes due. So if you are one of those who have newborns and kids that's in daycare, and you've made like $19,000, $20,000 for the entire year, when you go and file your return, you can give your preparer the earning end of year report from the daycare center. You can give them the Social Security card and everything for your newborn child for the child tax credit. I can guarantee you it is only going to generate for the credits that you up until the tax liability. So 9 times out of 10, the CTC is going to cover that tax liability. You're not going to get $1 from having daycare on there. It does not work how it did in 2021. And that is what I need everyone to know, that these credits are not working how they were 2 years ago. Social Security income, if that is the only income you have, my babies, I hate to say it, you will not qualify for a refund in the upcoming year. If the only income that you have is Social Security or SSDI or retirement income or rental income or cancellation of debts, all of those types of incomes are taxable incomes, but they are not considered earned, so you will not get a refund from it. Especially for my Social Security recipients. I had a lot of individuals who in 2021, they were allowed to file and get those payments for their kids in the amount of $3,000 for the 6 and older, or either 36 for the 5 and younger. It's not happening anymore. That's no longer here. So if that income is the only income you have, and you know you're on Social Security, or you get SSDI disability income for you or your kids, and you're like, okay, because I was able to get a refund 2 years ago, I couldn't get one this year, but will I be able to get one next year? No, ma'am. No, sir, you will not. Social Security income is not considered a earned income, so it will not generate a credit. As well as unemployment income is not considered an earned income. You won't get any credits. 1099 Rs, which is retirement income, 401ks, it is not considered earned income, so it will not generate a credit. Cancellation of debt will not generate a credit. Rental income will not generate a credit. Rents and royalties will not generate earned income credit. So all of those type of incomes, yes, you must report them if you receive them. Gambling wages, W-2Gs, it is not considered earned income, so you're not going to get any credit from it. So I just named a whole bunch of general incomes that individuals get, and you're like, okay, I used it year before and I got something. Am I not going to get anything this year with using it? No, you will not. They are not giving out credits to, it's back to being based on the income and the type of income. Hey, Terry, I seen your message while I was in getting ready to go to Atlanta. So I'm gonna call you, Terry, after I get off after we end this live. I'm gonna give you a call, Terry. And I miss you too, friend. So yeah, guys, it is not working with any income next year with anything other than W-2s, Schedule C's, Schedule F's. Now, Schedule C is several forms that are reported on the Schedule C. You got the 1099 miscellaneous, certain income there will still carry forward to the Schedule C. The 1099 NEC will carry forward to the Schedule C, and the 1099Ks will be income that is reported on the Schedule C. So 1099Ks, the 1099 NECs, 1099 certain 1099 miscellaneous can be reported on the Schedule C. And if that is the type of income or the tax form you have, congratulations. you do qualify for a refund next year. But it is only those types of incomes. The incomes for, like I said, the retired and Social Security and disabled, unfortunately, guys, you are not going to be able to get a refund. If you put that income in, I don't care how many kids you are taking care of, it is not going to give you any kind of refund off of that. Okay. So please be diligent when you're going into the tax offices and you're asking for estimates, and you know that the only thing you got is the SSA 1099, and that's all the income you don't made all year, and you're trying to see how can I go about getting me a refund too. You're going to potentially mess up your monthly payments with Social Security if you let somebody add in business income. And that will be because Social Security is going to be like, wait a minute, we've been paying you every month because you're disabled, but you're reporting that you've been doing work and you didn't let us know you were working. So now one or two things is going to happen. They're going to reduce your monthly payments, or they're going to kick you off of Social Security. So even for my SSI people, recipients, y'all do not be quick to just go because you want to get a tax refund and letting people report income, especially if you're not allowed to work. Social Security Administration do have certain programs in place where they allow individuals to get their benefits and work, and they don't say a dollar amount. It's a total amount of hours that they allow you to work on the work program with Social Security. Now, if that is the case, then you need to find out what the hours are that you're allowed before you just let a person, because you got 2 or 3 kids and they know you get Social Security, and they go and tell you, well, I'm going to just say you made $12,000. That can still potentially mess with your monthly payment. So y'all tread lightly for the ones who get those type of benefits, because it is a way for it to trigger not only an audit with the IRS, but Social Security will contact you saying, you reported income, you reported you had a job, and now you have messed up how you take care of yourself and your family month to month for a payment of one time, possibly, maybe, you don't know, I don't either, that you can, like, you only getting $3,000 or $4,000 and you don't knock yourself out of receiving a remainder of $9,000-10,000 for the year that you use to pay your bills month to month. So the risk is not worth the reward. The reward is not that much. Okay, SSDI, you can't go over 1470, right? So yeah, they have amounts. They have amounts, Terry, that they tell you before your payments come out. If you start working or you take any kind of contract job or whatever, it cannot be this amount. It cannot be over this amount monthly. Okay, and usually it's a low amount that they allow you to make, where they are not trying to end your benefits. So y'all be careful with that if you are on Social Security or you're getting Social Security for an individual. For my individuals who are married, filing joint, if your spouse or your partner is in debt with with child support or student loans or anything, because they are going to be taking refunds in the upcoming season for those arrearages. Child support is one. Student loans is another. We know the student loan forgiveness period have ended. Angelique, you said you thought it was a dollar amount. No, ma'am. They usually tell them how many hours they can work. And based on the hours that they can work, it has to stay a low amount month to month. So if you got some of your clients or Social Security recipients and they are working, because it's possible. Okay, Terry. But it is possible for you to get your Social Security every month and have a W-2 job. It's possible. It is. But you have to be reporting to Social Security that you're working. So a lot of people get it mistaken because they think, oh, well, they told me I can work, but you ain't reported that you worked, but you want to be a business owner for the sake of getting a tax refund. Social Security is going to send you that letter so quickly, and you know, we got to reduce your payments. We overpaid you in all of these months because you were working as a business owner. You were working as a contractor. So y'all listen, don't take those risks. Don't take those chances if you do not have to. It is not that serious where you're potentially going to be messing up how you take care of your family all year long just to say you got a tax refund of $3,000 or $4,000. Is it worth it? Now that's a question you have to answer. For some of y'all, you like, hell yeah, Nene, I need that money. I need all the money. But what you're gonna fail to realize is you get that $3,000. Now you're not gonna get that $900 payment that you was getting every month from Social Security, because Social Security say we overpaid you. You made money. So now we got to go back, and if you do it more than once, they're gonna remove you from being able to receive the benefits at all. So just know, y'all tread lightly going into the next year. I am up on 45 minutes with this one. So y'all know I don't like to go over an hour on the when I'm doing StreamYard. So I am going to get ready to end this live. I just want to say gratitude for everyone who did join. Gratitude for everyone who is coming back to watch the replay afterwards. I will be coming back, if not tomorrow, on Wednesday. Wednesday, we're going to go into depth on how to look at these credits. I'm going to have a complete breakdown on how CTC works, how EIC works, and how the Child Independent Care Credit works. And probably one day this week, hey, Latoria, and probably the end of this week, we're going to talk about the college kids. What my parents need to know: if you have a child who just went into college and this is their first year, and you'll want to know, what do I qualify for? Can I use them? They worked. They did a little part-time or intern job at the college. And they want to file their own. And Miss Nene, what advice? We're going to go over those scenarios as well the end of this week with the AOTC. We're going to be talking about the American Opportunity and a Lifetime Learning Credit. Those are two different credits, but they're both based on education. Okay, so American Opportunity Credit is a refundable credit, and the Lifetime Learning Credit is a non-refundable credit. Y'all need to know the difference in the both. So we're going to talk about credits on Wednesday with the child CTC, EIC, and the additional child tax credit payments, because there are increases in the CTC, additional CTC. Like I said, with this $4,000 per child, I don't see why they are quick to share that, which is false, but they're not sharing what is factual, meaning y'all got to increase. We got to increase in, well, I say y'all because my son claims my daughter. That's who carries her. That's who actually provides care for her. So he'll be able to do the ACTC, which is additional child tax credit, but it is up to $1,600. Not saying you're going to get a full $1,600, but you can potentially get up to $1,600 for your dependents that's under the age of 17, meaning 16 and younger, based on your income. Everything is based on income. The requirements is based on the income. Kitty tax. I think we may need to talk about that as well. Kitty tax is where somebody has told somebody that you can use your child's name and social security number, and you can use it as a deduction, and you can get that child, and you can do this with that child's information. No, you can't. We're going to explain kitty taxes for unearned income versus when you're saying that they're an employee. It's a $12,000 deduction that they allow you to pay your kids, but your kids can't be contractors. Your kids have to be actual employees of the company. And we're going to talk about that in the next live as well when I do the credits. So just know this is where y'all will be able to find me at from now on, over on YouTube and Twitter. I may do a StreamYard where I let it do the Facebook Live as well, just to bring individuals in that's over there that is not getting the notifications, because I did hear that a lot. Like Miss Nene, the notifications, it didn't notify me you were going live, or it didn't tell me that you were getting ready to do a live, or I didn't see that post. I may do one where I actually let it stream on Facebook, just so I can know that they need to get from over there and they need to come over here to participate in the lives and be able to get this information. Okay. All right, guys. So I love you all genuinely. I wish you all the best. May your day be fruitful, successful, and whatever else you needed to be on today. Peace to all of you. And I will see you guys here. The next one will be on Wednesday. And Wednesday, we're going into depth on these credits. Now, next week, let me go ahead and give this out. If you are not following this page, or if y'all know somebody who needs to follow this page, y'all go ahead and send them over here. Because next week we're going into the business aspect, meaning I need to let some of these new preparers know, some of these new EROs know the tricks that falls with going into business with individuals that you know nothing about, and they're not being honest with you about how your software is going to be funded, the fees that they're charging you. We're going to go into all of that next week. This week will be dedicated to strictly nothing but clients and keeping y'all updated on how the credits will work. And the credits will be the child care, EIC, the EIC, CTC, and then we'll look at the education credits on Friday. Okay. All right, guys. So I am going to end this, right? Because I never get any report when you go live on Facebook. Terry, it's a lot of people saying, Mz Nene, it did not show me you were going live. I don't know what's going on. Somebody suggested that maybe I need to start posting on a daily so that the page will be visible to more people. I'm not sure if that's what it is. I'm not sure if somebody has gotten me shadow banned. That's why I say I got to get off of Facebook, because people don't like the fact that I tell y'all the truth. People don't like the fact that I'm giving out information that they're charging hundreds and $1,000s for y'all to get the information that y'all can come in here for freely over here with me. So I don't know if it's a hater's tactic where my lives are not being notified and individuals are not being shown that I'm going live. It's okay. I'll be over here on YouTube from here on out. And if I just so happen to do it on Facebook, it'll be through StreamYard. It will not be directly live on Facebook. Okay. All right, guys. So I'm going to go ahead and get ready to end. I am going to start and end with my little jingle. So the jingle will play, and y'all have a blessed rest of y'all day. AKA Unlimited. AKA Unlimited. AKA Unlimited. AKA Unlimited. AKA Unlimited. AKA Unlimited. AKA Unlimited.
Who that? AKA who that? Unlimited tax. 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 We got the best in the city, so come and fire with us, and we gon' get you the max. On for real, you gotta come see us, and we serving all 50 states. It don't matter where you at. You can get your tax e-file, or we can send it in a check. Let go. Tax loans, come and get them. We got affordable prices. Come and eat with a boss. I got a couple of slices. Come and see what the hype about. AKA Unlimited Tax Service. Come see us right now. Right now.